Let's get on to Sprott. So I think let's give us a little flavour of what you've been about. But can we? You've told us about some of the things that you have built with Sprott, you've sold into Sprott and what they're trying to build. But what's the end game there? Because I know you're a 67, sprightly, very dynamic individual, but what are you trying to get out of this, and what is Sprott trying to build? That Sprott, the company, trying to build?
I humbly, I would suggest that we're trying to build the finest focused natural resource investment manager on the planet. And I think, frankly, we're pretty close to being there. Our franchise is mostly precious metals. And the consequence of that, I think that the next 2 or 3 years are going to be extraordinarily kind to us. The nature of all extractive industries, but particularly precious metals, is that they're both capital intensive and cyclical. And we need to think for our clients and for the organization itself beyond precious metals. My experience is that precious metals markets give you 3 or 4 extraordinarily good years, and then 3 or 4 or 5 or 6 fairly painful years. But if you are diversified across the whole spectrum of natural resource investments, which is to say, if you search in a forward-thinking manner for bear markets that will become bull markets, you will do well over time, and that certainly worked for me. I am one of those who has come to understand that in cyclical businesses, it's bear markets that are safe and bull markets that are in fact risky. We have been through maybe the mother of all bear markets in precious metals equities, beginning 2011 through 2019. Our thinking at Sprott is that bear markets are the very authors of bull markets. And so while our competitors were either in fetal position, doing nothing, or diversifying into businesses that they knew and loved, like marijuana, we were focused on natural resources and precious metals. So the consequence is that we have been working 10 years to be the overnight successes that we're enjoying now. Our suite of products, as an example, include these New York Stock Exchange physical precious metals trusts, which have tax advantages for U.S. investors, but they end up being for investors who are concerned about the structure of the financial services business or concerned about the political structure of countries, very good vehicles in the sense that they're 100% precious metals based. They don't accept deposit receipts or anything like that. So there's never a chance that a holder in our trust could be the unsecured creditor of a counterparty. These were really built for bespoke precious metals portfolios, built in fact, because before we constructed the product, we had a lead order for $250 million from a guy named Sprott, the same guy whose name was on the door. So when we talk about a bespoke product, that was truly a bespoke product.
You're in the fortunate position that you've got money. This has been building up over time. If you were maybe starting off today, you might have to approach things differently. So, but let's stick with this. Do you think you are the 800-pound gorilla in the room? Can you compete because you are so niche in terms of natural resources, particularly precious metals? And I know you're trying to build a portfolio of products here, but can you claim to, say, move markets or move sentiment or change sentiment?
We don't try to move markets. We are definitely trying to change sentiments. Our whole marketing and advertising thesis involves investor education and investor outreach. And so efforts like these, as an example, consume most of the time and treasure that we spend on marketing. And we are definitely trying to change the way both institutional and retail investors address the market. And we're also trying to change in our own way the way that issuers face the market. So in terms of trying to change sentiment, I would say that's an important part of who Sprott is at its core. Trying to move markets, no, not so much. The markets are bigger than us. As to competition, we are blessed and cursed with a reasonable amount of competition. At the very top in terms of equity markets, of course, would be BlackRock. They forget from time to time that they have a precious metals business. It doesn't matter much to them, but they matter an awful lot to the market. And there are, of course, lots of investment banks that are agents as capital providers. We're probably unusual in the sense that we're as much principal as agent. if there's a transaction, either lending or equity transaction that comes out of Sprott, it's likely that the lead order for that transaction is Sprott. So in terms of our capital markets group, think of a sell side group with buy side roots, which I think is healthy. I think investors should look at whether or not the agents are enthusiastic consumers of their own investment products.
Right.
At Sprott, we certainly eat our own cooking because it's the right thing to do, and over 40 years, it's tasted pretty good.
Yeah, no doubt. You've done very, very well out of it, and your name appears with most of the conversations I'm having at the moment. You seem to have a little piece of the pie. But tell me specifically about what you're trying to do. When you're saying I'm trying to change sentiment, and that could be at a corporate level, whether it be the issuer or otherwise. What is it you want them to do? I mean, clearly there's some branding component, because I see you rather eloquently. You've got a very cultured language, and I see these interviewers rather either doe-eyed or glazed over, not quite grasping the importance of what you're saying. So I do enjoy you, but when you're having these conversations, but what is it that you're trying to get out of the market? And what do you think the immediate benefit to Sprott is? Is it just at a corporate level? That's all you can hope to affect change in?
I think that the first thing we'd like to do is, on the retail investor side, cause people to exercise common sense and work a little harder. Common sense turns out to be fairly uncommon. And many speculators make many correctable mistakes. Many speculators seem to be got a bunch, and we would like the process to be more focused. We believe in the contrarian approach to natural resource investing. We think that the first truth is that bear markets are the authors of bull markets, and bull markets are the authors of bear markets. And so we would ask our clients and people who propose to become our clients to adopt a portfolio that's more contrarian and more value oriented and less momentum oriented. We have also learned that in businesses below $1 billion in market cap in particular, that the most important asset on the company's books are seldom physical. They're much more commonly human. We have learned that almost all of the value delivered to resource equity investors over the last 40 years has been delivered by less than 5% of the management teams employed in the sector. So we try to cause our clients to invest all of their money, if we can talk them into that, with tier one management teams, with management teams that have been serially successful in the past. And in fact, confine their activities to companies where the business focus is the same as the business focus that the management teams have enjoyed success on in the past. If someone comes to me and he says, Rick, I've listened to your blogs. I've been a success in mining because I turned around and operated successfully a gold mine, producing gold mine in Archean terrain in French-speaking Quebec. But the value proposition in front of me is that the same person is exploring rather than producing for copper gold in the Spanish-speaking Peruvian Altiplano in tertiary volcanics. While the person may have been a success, it's arguable that the task at hand is so different that his or her success is irrelevant. So we would ask our clients to employ common sense. We would ask them to have a value orientation and, in fact, search out sales rather than search out sectors that have already performed. And we would ask them to pay particular attention to the management teams and the concurrence between the management team's resumes and their task at hand. We would also finally, at least in the speculative aspects of our business, we would ask the clients to understand when they are analyzing a company, that they look for the process of answering unanswered questions. In exploration, it might be, will the drill hole prove the third dimension? In development, it might be on time, on budget, that kind of thing. But if you focus on answering the unanswered question, understanding where value might be delivered, you will do better over 10 years than if you skip from story to story with less of your own involvement in your own portfolio. So I would say that that's what we're trying to cause to occur.
Okay.
With the
Okay.
high net worth retailer.